Alright, so in this video, I'm going to be breaking down the pairs that we called last week. Let us see how they went and let us see what we did last week, right? So if you come over to my screen right here, you can clearly see that the very first pair we are calling here was Euro GBP, and we had GBP card, we have all these other pairs. So this is the particular pair I actually took last week, right? So it's a very clean setup. Now I will break it down, right? I'll break the pair I took last week, and then I'll break other pairs that I couldn't take but gave us opportunity last week, right? Fair enough. Let's go. So Euro GBP, as you can see, we had a very strong area of interest right here, right? So coming to the area of interest, we were expecting price to close below this line because on the 4-hour time frame, that particular line has held price as mostly support, right? So we need price to be trading below that level to be able to sell. Now, last week I was also explaining how the take profit target of this market is we don't have any clear take profit target, so we are just targeting 1:2 on this market, on this particular market, right? So this might actually be the cause of this reversal. I'm assuming that price actually got to this take profit target, I mean this last previous structure point on the daily time frame, to react off of that, right? So I actually lost last week. I took one trade last week actually, right? Waiting for price to clearly be trading below that level and a retracement and an engulfing for me to press sell, right? So basically price went into profits over like in 2 days. So we are just shy of 6 pips to final take profit before price reversed all the way to the skies, right? So this was an L last week, right? I'm not really happy to be making a video where I made an L, but that's pretty much what happened last week, right? Transparency. But we had other pairs we are looking to call. This was GBP card. We are looking for a retracement here to buy, which he bought, and eventually he shifted structure again. No trades opportunity on that particular pair. Same thing on GBP JPY. So we're expecting to buy and he bought, right? But we didn't get opportunity on that one. So the only one we probably got on our opportunity was Euro JPY for buys, right? And there was someone who was asking me question about why I saw a buy on Euro JPY, right? So it's because of him I'm making this particular video to kind of break down that trade. So this is the comment right here, and let me show you exactly what I saw on Euro JPY that made me want to buy this market instead. So this market would have potentially given us a 1:3.8 if we took it, but we didn't. So yeah. So now let me explain what I saw on Euro JPY. So bro, I wish you are really watching this video right now so that I can break this down for you. So as you can see, the overall market structure is clearly bullish, right? So this is just a market that is just showing clearly that Euro is stronger than JPY for only God knows how long. Let's see. Alright, so since this point to current market price. So let me explain that. So since this point, price has been trending upward, right? So for, as you can see, 370 days, 308 days, I mean, right? So for 308 days, Euro has been stronger than JPY, right? So it just shows that this overall market structure is bullish. Now, but that is not how the strategy works, right? The strategy works on internal market structure, how higher highs and higher lows are showing, right? Now, if you're watching this, just watch this now. So if you look at current market structure, you can clearly see. So before all this market movement happened, we are going to be stopping here to explain this, right? So if you look at this, you can clearly see higher high, lower high, higher high. This market is still clearly bullish, right? Lower high, then higher high again, right? Now, coming down, you can clearly see that this market shifted this structure bearish. So this market structure at the time was actually still bearish on the daily time frame, right? Now, and I drew an area of interest right here because that is the only area of interest that we can find on this chart. That is the second thing. Now, the third thing that I noticed was that we had about 1, 2, 3, 4, 5 rejections from this area. Now, if you are using the strategy, you just know that anytime we come to an area and there is strong rejections, it shows that that area is very strong and it's likely to hold. It's likely to hold price as either support or resistance depending on the scenario, Secondly, we also had an EME, and we had about 3 rejections rejecting from that EME, right? Now, also, one thing I noticed was that this is not an average price movement of this pair. If you look at other red candles, they are not as big as what just happened here. I don't know whether you understand. If you look here, you can clearly see it took price 3 days. If you look here, you see that it took price about 3 days to get to this level. Here, it probably took like 5 days. Like here, it took 2 days to create just this price movement. As you can see, the sellers in this market are actually weak, right? This right here is not, to me, was not a real like price. It's not what happens all the time, basically, right? So it took price about 2 days of selling pressure to create about 452 pips. On average, it takes price about 196 pips to 3 days to create about 196 pips, something like that, And here it takes price about 4 days to create 124 pips. So that was not really, it's not a price movement that happened all the time. So to me, that rejection was going to reverse, right? So I was still seeing bullish signs, even if market structure just shifted bearish. The set and forget strategy just encompasses why you should buy rather than you should sell. It doesn't mean that this market was not bearish. It was bearish, but the only reason I'm seeing that it's bearish is that it just broke below this low. But from all these other things I said, the overall market structure, the area of interest, market has rejected from this level multiple times, that rejected from EME, is showing bullish engulfing, all these things is showing that we have more reasons to buy than to sell. The only reason I'm seeing to sell is probably market breaking under this low. And by the way, if market is breaking under this low, you can't necessarily even start selling from here. What you will expect is a lower high, to potentially continue selling. So even at that, it's still showing that market is going to buy at the end of the day. If you look at the weekly time frame too, at that time we did not have this candle, right? This was last week. So what we had was just these candles. Price came, and you can see on the weekly time frame, price rejected that area of interest again. Now, another thing I noticed was, if you look at this candle right here, as you can see, this red candle, you can see that there's no wick to the top. If you are following this strategy, you know that Marabuzu candle is likely to get that wick to the top. In fact, that's what that's what actually made our trade on Euro GBP reverse. I'll show you guys, right? So there's no wick to the top, which means price is likely to come back to around that price area again. This is just something that happens, and I don't know why, but it just happens, right? And it's just a pattern that you cannot ignore, right? So weekly time frame, bullish, right? Daily time frame was bearish, but there were more signs to buy on that market, like I just explained. Now 4-hour time frame, let's go to that and see what we had there. Now if you look at the 4-hour time frame, right, when we came to area of interest, we reacted from area of interest. Now 4-hour time frame is what? It is still bearish, right? 4-hour time frame actually is still bearish. But if you look at internal market structure, we started breaking highs. Now if you taking the data that we got on the daily time frame, it shows that price has been reacting from this area multiple times, multiple rejections. And now if you now come to the 4-hour time frame, you can now see it breaking new highs. Are you understand what I'm saying? On the daily time frame, it showed that price was rejecting this area multiple times. Then you come over to the 4-hour and you're not seeing it breaking new highs. That is to show you that rejection is likely to hold on the daily time frame, right? That's another data that I saw from there, and that's why my bias for this week was actually biased, right? Now we broke the first time, you can't really trust it. You don't know if it's going to come back down and stuff. Then it broke again for the second time. It's showing that price is likely to continue bullish. What is a bullish market made of? Higher highs and higher lows, right? Now this is just one instance where you just learn what the market is doing and you just buy instead of just following the strategy blindly sometimes, right? But I strongly advise you stick to the plan, stick to whatever plan you have, and trade. Now coming over to the 1-hour time frame. Now coming over to the 1-hour time frame, this is exactly what we are waiting for. Coming over to the week, we needed price to break above this high and retracement to buy. okay, this was where we saw market. So what we wanted, we needed a break above this resistance level, right, to actually buy. So once we had a break, I was now looking to buy, right, without price breaking under this low again, right? So if we have gotten an engulfing right here, we would have actually bought from here and put stop loss below this low, right? But price shifted bearish again. That's why we did not enter right here. As long as price is trading above this level, it's actually safe. So this trade was a little bit risky to enter on the 1 hour time frame, just to be clear, but it was actually a calculative move, right? But again, we did not actually take this trade, right, because of that. Now once we started trading above EME and we now started trading above this um minor support and resistance level, as you can see, we had this break, we had the retracement, and we had the engulfing. Now that engulfing will depend on how strong the engulfing is for us to enter this market. Now if you look at this engulfing, you can clearly see that this particular engulfing engulfed about 1, 2, 3, 4, 5 candles of price action. So 1 hour engulfed 5 hours of price action, right? So that was why the trade was good, right? And then you enter here, and pretty much keep your stop loss below this low, under EME, under support and resistance level, a very safe zone, and just give you small pips to the downside, and then set and forget, as you can see. So that was how I caught that trade. So I just explained it in a way that you understand. I really hope you understand. If you understand, put it in the comment section. I'll see you there, right? So that is that for Euro JPY. We also had other pairs that we were calling last week. So this is what NZD USD. I don't think we got an opportunity on this market. Alright, so NZD USD, we are actually looking for buys, but we did not get an opportunity on this market. Same thing on Euro USD. Same thing, we did not get an opportunity. This might actually happen next week, right? So I'm likely to call Euro USD next week, right? Then the other two pairs, Euro JPY for sales, which we did not get an opportunity. If you look on the 1 hour time frame, you can clearly see we are waiting for a break, which it happened, but the retracement did not happen back into previous structure points and minor area of interest for us to sell. We just missed it, right? And then the one that we did not miss is GBP AUD. Now I actually still miss this one because I was already on Euro GBP, right? So it's just so unfortunate. But again, as you can see from the part of last week, we are waiting for a break, retest, and an engulfing to sell. As you can clearly see, we had this break, the retracement, and we had the engulfing right here. You enter on the next candle after engulfing to be sure that that is an engulfing, right? And then you sell. Then you put your stop loss in a safe zone. So I'm supposed to put my stop loss above this high, but I don't believe that that high is going to hold, right, in case price is coming back to stop loss. So I put it in a safe zone where price have reacted multiple times like this, right, above this high multiple times. So I don't need price to get there. So if price is breaking above that high, then it means I'm totally wrong. Then again, target 1:2 or even more, right? But 1:2 is very realistic, so that's why I like to target 1:2 instead. So that's pretty much how last week went. So I actually called those trades on the Telegram. So I actually called those 3 trades on the Telegram. How I was planning on buying Euro JPY and selling Euro AUD and selling AUD GBP AUD, right? So I did not actually gatekeep anything, right? It's just so unfortunate that out of the 3 pairs that we called, we happened to take Euro GBP, which was in profit for about 2 days, and then 6 pips to take profit. It just totally reversed, right? I'm not even mad. I follow my system. That's very good. And let us see the new pairs that we are going to be trading this new week. So I'll create a new video on that. So let's see what we have there. So that's pretty much it, guys.